Good afternoon from the UK, and welcome everyone to Capco's webinar session. My name is Owen Jelf. I'm a senior partner and the global head of capital markets here at Capco. I'm delighted that you could all join us as part of this capital markets series of webinars. And today we're going to be discussing prime brokerage as a business offering for the industry. The classic offering, or prime finance as it's sometimes called, is a strong business for balance sheet usage, leveraging your bank's franchise. And at Capco, and like others in the industry, we see the prime brokerage space as an area that's going to continue to provide growth for our clients, and obviously associated investment to provide differentiation and so on. So reflecting upon that facet of the industry, we've continued to build capability, and we see a lot of focus around the globe for this particular business area. Clearly we've had a large number of people sign up today, and that in some way underlines that point. So thank you again for joining us. We have a panel. We're going to do this today as a panel. We've got 4 individuals on the panel. 2 are senior figures from the prime brokerage industry, and 2 are members of Capco's senior leadership who themselves have considerable prime brokerage experience. You can see the bios and mugshots on the screen. So delighted, first of all, to introduce Terry Minke as our first panelist. Terry has been instrumental in building out successful prime platforms throughout much of his career. 20 years at Goldman Sachs in prime, senior MD at Bear Stearns in their prime brokerage business, and then more recently joining HSBC to launch their product. So currently Terry is the MD and global head of client management at HSBC. So welcome, Terry. Joining Terry is Neville Atta, who is the Managing Director and Global Product Head for Equity Swaps at Jefferies. Neville's prime credentials, highly credible, been running product development platform for Morgan Stanley Prime, and 6 years on the buy side as a global hedge fund COO before he came back to sell side with Jefferies in the middle of the decade, 2015. So both of you, good afternoon, and thank you so much for giving up your time today. So completing the panel, as I said, 2 individuals from Capco. George Black, who heads up capital markets for Capco in the US. George, after joining Capco, was 12 years at Lehman and Barclays in senior prime roles on the product management side. He joined Capco in 2014, and as I said, is now the head of cap markets for us in the US. And Anthony Bennett, who heads up the prime business area for Capco in the UK. Anthony has worked in prime at Morgan Stanley, Goldman Sachs, and HSB and SocGen. As I said, he's the prime brokerage practice leader, and has been an author in the industry in the last 3 months, highlighting some of the trends, particularly around COVID-19 and other challenges. So we're going to have the panel moderated by Tej. Tej Patel heads up our regulatory financial risk and compliance offering for Capco. So without more ado, I'll hand over to you, Tej, to get the conversation going. Cheers.
Thank you, Owen, and welcome to all the panelists and those on the line who've been able to join us. As Owen said, look, our theme for today is the future of prime brokerage. What's in store for prime brokerage in 2020 and beyond? So I have got a few questions for us to get the conversation going with the panel, but please remember to submit your questions using the Q&A function, which is the last icon you'll see on the screen on the right-hand side. So I'll go through as many of those as possible in the Q&A section at the end. If, however, we don't get to them for any reason, we will come back to you individually as a follow-up. So rest assured, we will come back to you. So without spending any more time, we're going to get straight into the first question. I'll open up to the panel. So first question, if I may, is what are the key regulatory challenges facing prime brokers? So, Terry, would you mind opening up for us, please?
Sure, no problem. Well, I think there's a number of key regulatory challenges facing prime brokers at the moment. You start with SFTR, and then you go on to CSDR, and then IBOR demise and MRAD. And I think that really all of those are impacting to various degrees on the prime brokers. I think SFTR is obviously about transparency and has been since that regulation came into force and was implemented and continues to be implemented across the product stack. And I think that's really about data and reporting of data. And it's really the drag on prime brokers, if you like, is really the drag around providing that information. There's a large number of fields to report to the regulators. There's a lot of information that needs tracking, it needs matching in many cases. There's a delegated reporting element to it as well, of course, where prime brokers are being asked to report on behalf of their clients. And really that leaves an operational heavy burden on systems, infrastructure, data, of course, and then the testing of all of that information. So I think SFTR straight off the bat is fairly hefty, but is actually obviously key to meet. I think then you move on to CSDR, not necessarily directly prime focused, but obviously impacting. And that's really focused around operational efficiency, of course, and is really forcing a lot more efficiency, a lot more automation in processes, because the knock-on effect of that, not having efficient processes operationally, are going to be a cost impact to either the prime brokers or their clients. And I think then you jump to IBOR demise, something that is really being driven quite a lot actually at the moment by the regulators. It impacts the clients as well as prime brokers, of course. The challenge is not so much implementing their new reference rates, that's fairly straightforward. It's the impact of the application of those new reference rates. And that's causing a few challenges because, of course, many prime brokers with their clients have got long-dated swap positions set to existing LIBOR rates. And really, the question then becomes, how do you approach the long-dated swaps with your clients? Is there new documentation required? And then leading on to the kind of the operational efficiency around reporting of the new reference rates and what that means in terms of timing, because the new reference rates aren't necessarily coming out at the same time as the old reference rates were, and therefore that gives a bit of a challenge to the prime brokers on reporting. And then lastly, just to touch on, I think MRAD, naturally, we slight delay on that, another year, but lots more clients fall into scope in September 2021, which is phase 5 of MRAD. And it gives us a little bit more time now to really engage clients individually on the impact of that for both them and the prime broker, and to find suitable solutions. So I would say from my perspective, I think they're the things that I'd highlight, which are really the key regulatory changes facing prime brokers at the moment, which will have some form of impact.
I appreciate that, Terry. Thank you. That's very insightful. Anthony, what's your kind of thoughts based on what Terry's just outlined? Is there anything you want to add to that?
Yeah, thanks, Serge. Terry's right. Absolutely. Data is a new battleground at the minute. There's a lot of focus, actually, not just on the data availability and extracting that data. It's not just transaction reporting. It's rightly, it's the impact on the business as well. Sometimes there's a law of unintended consequences of some of the regulations, and I think we've seen that specifically in prime across CSDR and SFTR as they impact the prime brokerage engine and sort of the hops between boxes and, you know, concepts of reapplication and the internalization process that primes use. You know, driving that, then you really need some real-time data. So real-time data is something that's coming out of it. But sort of more thematically, you know, regs are effectively one of the biggest funding pots and probably one of the few available funding pots at the minute that primes have. So it's not just about the reg adherence, it's not just about the data availability, it's about what value add can you get from that reg as well. So what are you delivering to the organization? What's the solution? So that's really about, you know, the data. What does that data provide? How does it drive decision making? What does your day two target operating model look like as a result of that? How do roles and responsibilities change within the organization? But also there's a commercial angle, right? So within CSDR, it opens up the opportunity to sort of be trading and trading and managing risk and providing a proactive service with the stock loan desk that can manage that buy-in risk. And that's something that, you know, we've not seen before offered as an actual proactive service. So there's some value add there for the primes to provide.
Excellent. Thank you both. That's quite an insightful view on regulatory challenges. So I'm going to move on to my next question, if I may. So the question I have for the panel is, what are the key challenges facing existing prime brokerage models? And to just follow up on that, what are the new services and products being demanded by hedge fund clients? So George, if you wouldn't mind opening up on that one, please.
Sure. Thank you, Tej. Thank you, everybody, for joining. Great to see a lot of familiar names in the attendee box. I think that the challenges facing prime brokers depends on where you are in the sort of in the maturity curve. It's a business that many prominent banks are seeking to build right now, and they're to get into it more, in a more comprehensive way. Capco works with many different banks who are at various stages of that maturity curve. So I think if you're at the beginning stages, the key is to try to really understand the client base that you're after, and to find a way to compel them to join your prime broker and to access your balance sheet through the financing and lending activities. The axiom that I always believe, and certainly throughout my time in the industry, is you have to be able to do the hard trades to do the easy trades. And you have to be able to find those ways to compel your clients to come and do that business with you by offering something that's of value to them. So that's going to be different for every one of the sort of market entrants for those lower down the maturity curve in prime. In addition, when you look at the more established primes and those up at the higher end of the curve, I think the biggest challenge is really driving a reduction in risk, an increase in control, and then an improvement in profitability. Prime has a characteristic, that it moves the top line up and down to some degree with the overall financing balances that their clients can put in. And so then it's incumbent upon the primes to really drive efficiency. And so the top line, whether it's in response to the regulations, which are all about, our various regulators trying to improve the control framework within the banks and within prime brokers specifically, whether it's about complying with those regs or whether it's about reducing operational risk, the key there is efficiency. So you see a lot of programs within the more established prime brokers about, taking out legacy infrastructure and also, really looking to fine tune and optimize the capital and scarce financial resources associated with doing this business, as well as how it operates.
Excellent. Appreciate that, George. Thank you. Anthony, is there anything else you want to kind of add to that before I cut across to Terry and Neville for their views?
Sure. In terms of those challenges and certainly, the product demand, one thing that certainly came out of the recent volatility as a result of the coronavirus is that we've seen a real shift in interest from hedge funds in terms of the asset classes that they want to now be trading in. So there's a real move away from equities, we talked about this concept of no new money going into equity quant at the minute, and there's a bit of a focus around the asset rotation into fixed income and credit. So obviously one of the challenges for primes will be, how do you offer PB service around some of the more balance sheet intensive aspects, providing PB to fixed income and credit strategies, offering the offsets, and the liquidity. We've also seen that there's been quite a demand actually for a lot of credit-based risk managers in the market as well. So that's obviously getting that's part of it too. But around volatility, managing the volumes, to a certain extent, it looks like primes did that very, very well. So the ones that invested in their platform in the past and look to sort of peak volumes and how they'd manage those peak volumes. I think average daily volumes were between 3 to 5 times what they were on a normal day. So that obviously had an impact to PBs in terms of processing, but also the de-risking and how you manage volatility in the future. The volatility isn't likely to go away. How you manage the de-risking as well. And I think primes, to a certain extent, as we said in our white paper, have predominantly passed the first test regarding that.
Okay, thank you. Appreciate that. Terry, would appreciate your kind of views on this.
Yeah, thanks. There's a couple of things I'd probably point out over and above what's already been mentioned, which I completely agree with. I think really from the client side, first of all, I think there's the requirement for more transparency and the more holistic view by the prime broker of that client's business. I think, traditionally, historically, clients have been accepting of the fact that, perhaps banks haven't been as joined up around their business, and therefore prime brokers have really been a little bit challenged to look beyond what the client is doing with them. But I think these days, the clients are really interested in what's good business for you, the prime broker, and what's bad business. What works for you as an organization and what doesn't. And it's going to be different for each prime broker because some prime brokers will be particularly well axed in certain markets and some won't. And I think, if you kind of go back 5 years, maybe even 3 years, prime brokers were quite happy to do any business. But I think the issue is that, and the reality is that not all of that business was good business. It had balance sheet implications that were perhaps not quite where they needed to be. And, capital requirements not where they needed to be. So I think clients really want to understand and want to have a discussion around what's good and what's bad for you, the prime broker. And I think that's something somewhat of a trend that I'm seeing. I think the other thing is inventory analysis. Clients are much more interested in inventory, especially the bigger clients that have the processing power to analyze inventory across the street and be able to look in depth at that inventory and what works for them and what doesn't work for them. And then I think if you flip it from the client side more to the business side, I think one of the challenges for existing prime brokers is really scrutiny on their businesses. I think over the past decade, regulation has had an impact on capital requirements and balance sheet usage. And therefore there is much more scrutiny on the prime brokers as to what impact the business, the types of business and the mix of business the prime brokers have on their book. So I think that they're the two key, I guess, challenges and changes that I'm seeing at the moment to existing prime brokerage models.
Thanks for that, Terry. That was very insightful. Neville, if I may ask you your kind of thoughts on these on this question.
Yeah, look, I 100% agree with what, so Terry's has touched upon there. I think the major change I'm seeing at the moment is really a real focus on understanding your business and understanding how that sort of, where you make profit, what makes sense for yourself. So I do think that the prime brokers will get much better at linking their execution capabilities and their financing capabilities, but also deciding what business they want to do and don't want to do. So, Terry's employer is a very different sort of type of entity than mine. So there are things which make sense for us and which we are focusing on. So we are diversified. Things like outsourced trading. It's a good opportunity for someone like us. It's probably maybe it's a too small opportunity for someone like an HSBC. But there's areas where we will have clients turn around and saying we're interested in doing this, and we have to honestly turn around to them and say, do you know what, that does not make sense for us. We struggle to make money on that. So as Anthony mentions, people are looking at some of the credit and the fixed income, and I think every prime broker has to look at those and really figure out if it makes sense for them and if that is something they want to get into. So I think, again, Terry was right. I think maybe 5-10 years ago, there was almost if a hedge fund wanted to do something, you said yes and just you did it. I think now people are much more focused on, does that make sense and can that, and is it sustainable? And I think that's a better thing. If you're a hedge fund on the other side, you don't want your prime broker suddenly, 6 months in, suddenly figuring out a type of business doesn't make sense, and then they don't want to do it. And the final point, the constant, the regulation, and you know what, I'm definitely not, some of it, I think it has not necessarily it's had consequences differently than maybe what was intended, but fundamentally, SFTRs, things like CSDR, ultimately are going to make us more efficient. So I think it has in some ways provided a resource pool which we've been able to use to improve our platforms. I think there will be ever more focus on understanding how, what's capital doing, how we're financing ourselves to ensure that we're making the money we should be making and we understand the correct drivers. So I think that is only going to increase. And I think over time, there will be sort of more mature conversations with the hedge funds on the other side, as Terry says, of, how do we make money? What makes sense for them? Whatever, to make sure that they have the right partners in the right areas.
Excellent. No, we appreciate that. Thank you very much. Okay, so we'll move on to the next question. So, kind of linked to the changes and challenges you've talked about it and what you touched on. What has been driving change across PB platforms most recently? So, Terry, if you wouldn't mind opening up on that one for us, please.
Yeah, I think we touched a little bit on regulation. Obviously, that's first and foremost, which past decade pretty much has been driving change constantly, year on year. But I also touched on previously, what that means, the balance sheet efficiency and flexibility, and the importance, I think, of really being able to analyze the data. So core to that is the data itself, and having the right models on what's good business and bad business. And then it's really how the prime broker really has been able to adapt. And having the flexibility to adapt, which is, I think, incredibly important. I think we're slightly lucky in that regard at HSBC by virtue of having multiple balance sheets that we can utilize, and fairly significant balance sheets. And we have to start looking at how we use those balance sheets more efficiently as a prime broker. Prime brokers typically work off one, maybe two balance sheets. But if you've got more to work with, then you need to start looking at those. So I think one of the big drivers for change, I think, has been, for us at least, to look at our balance sheet usage, not just within the core balance sheet, but also beyond. And I think that's incredibly important. And I think I just maybe throw one other out there, and it's the type of business that's been coming in, and there's been certainly a rise in quant strategies, and I think, what they lead to, and kind of moreover, I think how you adapt is and this is generally what drives prime broker models. It's your clients to a degree. It can be regulation, but it can be your clients and what your clients are doing, of course. And therefore, I think if you look at the quant business as an example, that has to drive business around execution as well as financing in the prime brokerage models. So really the ability to join up efficiently your execution into financing and not treat them as two individual things, I think has really driven a lot of change around prime brokerage platforms and models. Because I think for those particular strategies, you really need to be, robust in what you're providing your clients. So I think that's a key thing that jumps out at me that's been driving change.
Thank you for that, Terry. George, what are your thoughts on this?
Thanks, Tej. No, I think that Terry touched on several things, and the considerations that the prime broker has to take into account have evolved over the years. I think that Terry mentioned the importance of analytical capability around your data. I think that your clients are changing the way that they consume your data as well. There was a moment when in my time in the industry side of the world where we had to build mature and various capability as far as what our clients how they would interact with us, how they would consume their data from my former employers. And at this point, almost every buy-side shop has some analyst on the desk that can build exactly the visualization or report that they want, by cranking out some Python. And what they want from you is your data in a structured way. They don't want a beautiful PDF. They don't want an interactive web tool. They want clean, efficient access to your data in a way that they can then put it to work on their side. So I think that there's if you're stepping into this business now, you have the opportunity to say, okay, well, what are all the things that I think I need to build to check the box? And then what are all the things that I need to build to make sure I really make myself easy to do business with? When I'm talking to folks, that's one of the biggest lessons that I've learned over the years, which is you have to make yourself easy to do business with. If you make yourself cumbersome to do business with, there's so many other options. You're going to be thought of as a third or fourth prime broker, and you won't be getting the balances that you desire. So if you make yourself easy to do business with, the operational ease and the onboarding ease, all those things will help drive balances your way, and ultimately increase the profitability. And then I think that it's worth touching on the notion of ever increasing profitability or maintaining that profitability as you look at not only how you operate, but also which clients you take on. So that's a constant lens as far as, is this client going to generate the profitability that's accretive to our business or not? If so, that may drive the onboarding decision for the client from a PB perspective.
Okay, appreciate it, George. Thank you. Neville, be interested in your views on this one.
Yeah, I agree with most of what I've heard. I think the bits I would add is I think prime brokers are getting more sophisticated. I think, as Terry mentioned before, of understanding effectively the broader product. So, what is your cash equity desk doing with this client? What are you doing? How can you put the finance in and their ideas together and things like that? I think with some of the restrictions, for instance, on how clients pay because of MiFID and things like that, again, having the financing can almost become part of the package on the offering you're providing to the client. But I think putting all of those capabilities together, so you're offering effectively very much you're offering the bank as opposed to just financing on one side, execution on the other side, whatever, I think is going to become ever more important. The other thing I'd say is, and this is less on the operational side, more on the sort of call it the consultancy side, capital raising, things like that, is we've seen a lot more demand for what I call knowledge. So there's a lot of change going on at the moment, whether that is regulatory driven or big data or new techs and things coming out. So we're seeing a lot more requests and questions from our clients on providing things like that. So how do we help them steer through the sort of the current sort of environment? So I think, I definitely agree with the comments. Efficiency, lowering the barrier between you and the hedge funds, I think is going to be ever, is been a trend. I think that trend will continue. But I think that, acting as a sort of a knowledge center and acting as a sort of best practice and things like that is also one of those things where there's going to be further demand as hedge funds themselves try and become more efficient. In some cases, they're trying to become sort of in some smaller, leaner, whatever. They're outsourcing a lot of stuff, and outsourcing sort of knowledge and effectively people they can go to understand what the trends mean and what they need to be considering, not just from an investment side, but also from their own side, I think is another area where, sort of prime brokers need to step up and sort of really figure out how they provide those services.
Appreciate that. Thank you. Anthony, anything to add before we move on to the next question?
Yeah, I think it's a very interesting question, because ultimately, sort of to go up a level, I guess, it's about clients and costs, client demands that are driving it. I guess the interesting observation is that, what are PBs competing on? Excuse me. There's no one prime brokerage provider for the whole hedge fund market. But conversely, there is a PB out there to suit every hedge fund at the moment. And we're seeing a lot of market segmentation. And I guess the differentiator is that, those PBs that already have, PB business on the platform, they've got some say over where they go and what they build, whereas the newer entrants have really got to build to meet client demand and to really grow their business. So, to the points made, what is it in your firm's DNA that you're linking up? Is it the equity research and execution? Is it market access and clearing? A few clients have said to us actually that, platform is back, and, you're no longer just, and for a long time actually, you've no longer just been competing on price and inventory and balance sheet availability, but also the services around that. So, I would say sort of, listen to your product management teams, and listen to your clients and really take that feedback on board, because that's what's going to grow your business and that's what's driving it.
Okay, appreciate that, Anthony. Thank you. So moving on to the next question, which is a bit of a more forward-looking view for the audience. So what do you think the rest of 2020 has in store for prime brokerage and their clients? And more importantly, for the next couple of years, right? So I know we've talked about a lot of the different themes and factors that are driving change, but it'd be good to get a forward-looking view from your perspective. So Terry, if you wouldn't mind taking this one first.
Sure. I think if I look at the rest of 2020, I think it's probably dominated by two things. I think one is naturally COVID-19 related, and what is the new. I don't think any of us really understand what that might look like at the moment, but I think we're all getting used to what we think it might look like. But until this plays out a little bit more, we don't know what the new normal is, and I think that's really going to impact the prime brokerage relationships with their clients. It's a relationship-driven business, always has been, and I think always will be. And seeing clients, talking to clients regularly is incredibly important. So I think the rest of this year will be spent, really doing that remotely, probably for the large part, unfortunately, but also supporting clients. I think we could see a lot more volatility in the marketplace, and we need to be there for our clients throughout that possibility. I think the second thing is probably this year, Brexit. No one's talked about it for the past sort of 3 or 4 months for obvious reasons, because there's been this focus on COVID-19. But I think Brexit is going to pop up again. And it's a little bit like managing the unknown at the moment while these negotiations are going on in the background, and right around Brexit. I don't quite know what that means for regulatory change, perhaps, that might come in a transition period. So So I think the rest of 2020 will be spent really supporting clients and watching out for Brexit, I think. If I was to look forward beyond that, I mean, one observation I will make is, we've just come through a decade of regulatory change. I mean, it's significant, massive regulatory change, which has huge impact on prime brokers, banks, their clients. But I do feel that we're coming through the other side. And, I think that perhaps looking forward, I think we'll be a lot more focused on how we implement those regulations. So what I mean by that is the regulations have been largely implemented or are being implemented, but I think there's an opportunity to streamline. And I think that's where we'll probably see prime brokers working a lot more closely with fintechs, with regtechs, to really streamline what they've done around regulatory reporting and obligations that they have implemented over the past decade, because I think there's always room for efficiency there, and I think that needs to be focused on. So I think perhaps a little bit less regulation in the years ahead, but certainly more streamlined regulation. I think outside of that, looking beyond, I think cloud technology, we talked a lot about data in this call, and I think the move to the cloud, increasing computational power, meeting client demands around data, data storage, data uses, data analysis. I think, we're going to rely on the cloud to do a lot of that. It used to be that if you needed more of that, you just had another server. I think, that is no longer going to cut it. You really need to be thinking about cloud technology for accessing data. And then probably lastly, I would say next 3 years are going to be focused on perhaps China as a region. And I say that because despite everything going on in the world with trade wars, etc., I think, the last 10 years has been an incredible decade for China. Whichever way you look at it, the speed at which it's moved has been really astonishing. I think, and you look at China's strategy, to put this into context, look at an American strategy, which has an American first strategy, well publicized, that focuses on North America, but North America is 5% of the world's population. If you look at China's strategy, it's a Belt and Road strategy, which goes beyond China, which covers 50% of the world's population. So essentially you have this digital arms race going on between the east and west there, with Europe in the middle not doing much of anything. And that covers everything from AI to cars to banking, insurance, telecoms, social media. I could go on and on. If you want to access the American market, it's fairly straightforward, and you can take advantage of the American companies in that arms race. If you want to access the Chinese market, which is on the other side of that technology arms race, it's actually quite challenging. But there is a lot of client demand out there, and a lot of client interest in China and accessing mainland China. And, we see that as a theme continuing because of this technology arms race. And I think that's something, along with the other things I mentioned, which I think we'll start to see play out and would be quite important for prime brokers to help facilitate their clients participate in.
Excellent, appreciate that. Thank you, Terry. That was very insightful. Neville, is there anything you want to add on this point?
Well, I wish I could predict for what's going to happen next 3 years, because I'd probably doing something else at this point. I think the rest of this year is, unfortunately, I think COVID is going to sort of dominate that. I do that, I think people have almost gone back to I'll call it, let's say, the new normal. I hate the expression, but there it is. I think the regulatory projects, some of them being pushed back, but they will still go in this year. And I think for client-wise, we've seen a lot of clients, for one of where they've hunkered down a bit, they de-levered, they're trying to figure out which way things are going to go, and there's not real certainty there. So I do believe that we're going to see more volatility, and I think prime brokers need to support their clients in that. So I think for the next 6 months, it's going to be sort of a little bit, focus on the clients, make sure you're risk managing, make sure you're offering the support as much as you can. I think Terry's touched upon China there. I do agree. I think China is one of those countries where we do have clients asking us. I think the next 3 years is going to be more efficiency, hopefully less regulatory driven projects, but is then really going to be based on what the clients want to do. So there's particularly the sort of developing Asia Pacific region. We have clients asking about various markets. So it's going to be, how do you enter those markets? How do you support the clients in a way which again makes sense for them and makes sense for yourself? And again, that will be different prime brokers by prime brokers. So I think it's going to be, where can you add value to a client and understanding that. I think. But I don't see any reason in some ways. The next 3 years will have its challenges. But if you look over the last 10, 20 years, I don't think there's been any phase in that 3 year period where prime brokerage hasn't had to change because clients wanted to change their products. They've looked at different ways, or there's been a market event or regulatory event or whatever. So I do think it's one thing that the prime brokerage industry has proven to be very good at over time is this adapting to the demand. And I think there will be demand to go into these markets, but in some ways I see it as sort of more of the same in the next 3 years. I think it's more of a evolution as opposed to revolution, which I think we're going to see.
Excellent, appreciate that. Thank you very much. We're coming towards the end of the session, so I'm going to quickly cut to a poll for the audience before I try and get through some of the questions. So for those of you on the line, what are the key challenges facing prime brokerage today, right? So we've heard from the audience, from the panelists, sorry. It'd be very good to hear your views, right? So options are going to be regulatory adherence, cost reduction, platform modernization, leveraging and utilizing data effectively and efficiently, financing availability, expanding asset class offering. So as you'll see just above the Q&A icon, you've now got a little blue dot which shows that the poll is live. If you can take time to answer that, I'm going to take probably one of the questions we've had from the audience and see if we can get through a couple of them before we go into it. So we have a question from Jonathan. Has the global pandemic affected any of the leverage provided by your buy-side client base, taking into consideration potential cost cutting? That's an interesting one. I don't know, George, do you want to open on that one first, please?
Sure. Rather than put Terry or Neville on the spot to answer about their specific business, I'd be happy to elaborate from what I've heard more broadly. Jonathan, good question. Some of the questions I asked my friends in prime brokerage over the last several weeks is, how do they have any blowouts? How do they handle the volatility? From what I've gathered in those conversations, obviously there was a great deal of tension, great deal of working things through on the margin side and making sure that prime is appropriately collateralized. I did not hear of many examples of folks dialing back on leverage provided to clients, particularly with any given client sector. And what I did hear of is some firms who perhaps were over levered and got into a bit too much of underwater with the volatility. They got, to use a phrase of one of my colleagues, they got sort of walked to the door and handed their coat, but not to a degree where margin was indiscriminately jacked up on particular segments of the client base. I do think that prime brokers were able to navigate the volatility quite well. I think the overall allocation of capital to a division in prime has not been hampered at the banks that I've talked to. So I don't think that that's a systemic issue. looking across the industry.
Excellent, thank you for that. And if Jonathan, that there's still more insight you'd like, again, just reach out and we'll get that answered. But I think, yeah, as you said, George, it's probably not fair to put Terry and Neville onto the spot on that one, because that's quite a bit too close to specifics around there. Okay, and I'm just looking at a couple of other questions that we've had in. Just making sure we've covered them, because I think the last couple that have been posted around trends and forward-looking, and from Anonymous, we've had two different Anonymous questions. So one, what are the most important trends for PB to look forward to? I think that's been covered, along with the question around, does the panel think the industry's got to evolve to face its challenge? And again, I think we've seen a good answer on that. So we will get to one question, and I'll take the one from that's come in. So the question is, what is the opportunity for new incumbents targeting smaller hedge funds, sub $250 million AUM, for more established PBs moving back into that niche? Anthony, do you want to have give a view of that, please?
Sure. It's a good question. So I think that, the initial answer to that is that, every prime would probably say that they're open for business. But at the end of the day, we have seen a growth and a real focus on, the challenger primes effectively coming in and looking to provide services to, let's say, the small to mid-tier hedge funds. The drivers behind that effectively are, balance sheet availability, market access, provision of financing. But that alone in itself isn't enough, but the market does seem to be growing around that space, because obviously there are hurdle rates to be met. Obviously part of those hurdle rates mean that some clients are being asked to go elsewhere. It's really about how does it fit your strategy. So, what strategy are those $250 million funds following? But the inputs, obviously, it's balance sheet and reg capital that's driving one side of your hurdle rate and availability of scarce resources, but it's also cost of your platform. So I think what's quite interesting with one eye on the future is the fact that, you can spin up and expand and build out a PB platform and a PB offering if you have some of the basic building blocks of prime in your armory. So if you've got inventory, or if you've got the market access side, or the financing and balance sheet side, or it's a really cool sort of electronic execution business, then you can tack on and build out a PB business now that's not mainframe based, that is leveraging cloud technology at a fraction of the cost, that has real-time data availability, and even some of the established top 10 primes are looking at how do they move away from some of the expensive cost of their platform in order to bring that hurdle rate down. So it very much is an area that can be serviced, and it's an area that's sort of leading the charge in terms of new technology, and also embracing what could be perceived as a lack of innovation in prime, right? Certainly around sort of the post-trade space as well. So post-trade and data really can help you sort of bring those costs down.
Okay, look, I appreciate that, and apologies. Look, we're going to have to stop with the questions, but as I said, we'll reach out to those that have posted, even anonymous. We can reach out back and make sure we've answered the question for you. And if any of the other audience listeners want to find out, just reach out and we'll provide you the thoughts back on that. But I'd like to give the panel a chance for a final thought to leave the listeners with. So if George, if you wouldn't mind giving us a short kind of view on for the audience to take away.
Sure, appreciate it, and thank you again for everybody for being a part of this today. I love talking about it, and it's interesting to hear everyone's thoughts together. The reality is prime brokerage is a strong business. It's an annuity business. It's very sticky, and everybody on the street understands that. And the thing that we're seeing right now is that there's some very big balance sheets that are looking to join the game in the U.S. as far as prime brokerage goes. And so I think for the incumbents in the business, they have a significant advantage of having the infrastructure built, ready to go. But what you're seeing is that the long-term strategic view of many different banks, both U.S. banks who typically being focused on other businesses, as well as international banks with with a growing U.S. presence, you're going to see bigger and bigger balance sheets coming into bear. And the question is going to be, will they be able to build the servicing platform that will help the clients come and access that balance sheet? And I think that it's an exciting time to be in prime. In my career, I've always tried to build things, and this is definitely a time of building. And so I'm excited for the next 3 years in prime, and I hope all of you are too. Probably not as excited as I am, but I hope all of you are too.
Excellent, thank you. Terry, from you, final thought for our audience.
Yeah, thank you. Listen, I think I completely agree with George. It's exciting prime time, if I can put it that way. I've been in the prime business for many, many years, and it continues to evolve, it continues to adapt, and that's one thing. To mention what Neville said, it's very good at. And prime for many investment banks is an incredibly important business, and I put ourselves obviously in that bucket, and it's very well supported from senior management. The thing about prime is that it's not just about prime, i.e. financing and providing securities lending and a platform. Prime really brings what I would term the multiplier effect to investment banks, and that's the additional revenue that's derived from execution and equities, fixed income, futures, FX, and other products. So it is important to banks from that perspective. That might not always seem the case over the last few years when some banks have kind of struggled balance sheet wise. But it is an important business, and it's important business to clients, and it's a critical business to clients, and therefore that it is and always has been very much a partnership business with clients. And I think as the industry continues to evolve and new strategies and new products and services come online, then I think prime is well placed, most organizations, to continue to grow and support their clients, and I think that's absolutely critical for the industry. So that would be my closing remarks. Thank you.
Brilliant. No, thank you for that, Terry. And Neville, from yourself, please, a final thought for the audience.
I think it's going to come back down to capabilities. So I think, as people have mentioned, there's other people trying to get into the prime, there's existing primes, but I think it really does come down to every single provider to understand what their capabilities are and how they can best deliver those to the market. And I think from the other side, I think hedge funds are getting better at understanding the differences between primes and how they can use those. So I think everyone has to get more efficient, but I think it really is going to come down to, what are the strengths of the given providers, and how can you deliver those, and how can hedge funds best leverage those?
Brilliant, appreciate that. And Anthony, if I can, literally, you have very little time. If you can just give us your final thought, please.
Yeah, of course. Just to continue the theme of positivity, I think where we've got this convergence of sort of tech-savvy clients and transformation within markets businesses moving to sort of APIs and real-time data-driven environments, and there's obviously revenues to be won. I think it makes for, as everyone said, exciting times and a growth area.
Excellent. Thank you. And look, again, thank you all for the panel. So George, Terry, Neville, Anthony, again, appreciate your time and the feedback and just the kind of candid views on PB. So without any further ado, Owen, I'll hand over for you for closing remarks, please.
Yeah, thank you, Tej. Look, let me also thank our panelists for their insights and discussion and for answering the questions. So thank you to Neville and Terry, particularly as you've joined us from the industry, and George and Anthony, thank you for sharing your perspectives. I mean, clearly this is a opportunity for the industry and continued investment will be required to address some of the efficiencies, further business growth, differentiation, and the regulatory aspects. At the start of the call, we discussed SFTR and so on. So, in addition, of course, I thank everyone for dialing in and listening to this session. We hope it was informative and useful. As you can see, we're going to continue to do this on roughly a rolling 2-week basis. So the next one is SFTR. So with that, I'll close, and thanks again for attending, and by all means reach out to any of us if you would like to discuss any matter further. Thank you.